Today is edition of Back Roads of Illinois. We were bringing you lasted for farming sources and information sponsored by AgriGold. This is the Markets Club podcast for each Tuesdays and Thursdays on each month. We were talking about the commodities markets, how important to trade for the U.S. farmers. We were talking about that with Chris Robertson from Robertson Markets. Then we were talking about the cattle on feed report from the USDA. We were bringing it up with Kyle Bumsted from Allendale Incorporated. Here's Chris Robertson. We were talking about what's impact on the tariffs for this Chris Robertson from Robertson Marketing.
Yes, sir. Good to be here.
Let's discuss about these markets for right now. How is the reflection on the tariffs for the corn markets?
Well, after the initial shock, corn is actually rallying. Beans are rallying here today. Beans up 18 cents. So the market has shrugged it off. I think looks like it's going to be maybe it was a 1 day trade war. Maybe it was just a negotiating tactic. But yeah, certainly the difference from Sunday night where we were sharply lower to today, Tuesday here, where we're now higher. I'm looking at March corn. Looks like March corn had a high today so far of 97 and a quarter. That would be a great sign because when a market gets bad news and shrugs it off, that's a sign of strength. So hopefully we get back to trading supply and demand. And you just can't say it enough. A lot of people, I think, were worried that we were going to really have a big collapse in the grains, and to have this recovery, 497 spot corn. We're looking at 1076 and a half in the beans. A great recovery in the beans, which is surprising because last night China came back with their tariffs on the U.S. So all in all, I don't know how to describe it other than a great recovery. You've got soybeans now, spot soybeans making a new 3-month high back to October 8th. So all in all, if you were worried about a big negative impact of tariffs for the grains, I think you've got to be pretty happy today with the recovery. Just the whole screen is green in the grains.
Do you have any concerns about this near future with China?
Oh yeah, there's always concerns, always. That's why we hedge. But I think if anything we've learned from this last 72 hours, it's been that don't always assume that the market's going to repeat what happened back in 2018, 17, 18. The first go around with the tariffs, we did have a sell off. We did have problems, but I think you've got to stay balanced, stay focused. And I think a lot of people were caught getting too bearish on the ideas that there was going to be a larger trade war. Now it's still early in the day, but given the potential, what we were worried about, this is a good outcome, a great outcome right now. So we'll see. Hopefully it continues. There's a lot of what if ahead of us, but right now the market is telling you that it doesn't seem like this is going to be as bad as a lot of experts thought.
Well, we will see. Well,
Yes,
Chris, how are things in Parma, Brazil? They continue to send their beans to China?
absolutely, and that's not surprising. That's we've always been competing with them. I think that it's been an sorry, overall, it's been a good I'm sorry about the dogs. Sorry. I'll stand right here. I think all in all, China has been, they're continuing to buy soybeans from South America. I don't think that's going to change. Hopefully, we can get back to trading fundamentals, and that's going to mean weather and supply. Yeah, I would expect to see China continue to buy beans from South America. Hopefully, they keep buying them from us. Historically, they've taken 25% of our crop. And I think American farmers would like to see that continue.
Do you have any final thoughts on the corn estimate from the world supply and demand for this month?
Yeah, I don't think that's going to be really out of whack. I think the January 10th report kind of lit the fuse on that. The carryouts were smaller than people had thought. I think the market has addressed that already. It might already be baked in. Worldwide, I think that could shift a little bit. But I think really what we're looking at now is, what kind of harvest do they have in South America? How will that impact us? And then, it's February here. In another 8 weeks, we'll be out in the fields, planting our crop. So we're getting into that time of the year. Are we going to have planting delays, something like that? But I think in general, the worldwide supply, we know what it is. I think the big surprise the USDA gave us, excuse me, in the last on the January 10th report, that was a real game changer. Historically, it was one of the bigger misses. Thank goodness it was a miss to the bull side for producers, because it wasn't that long ago we were worried about corn with a 3 in front of it and beans with a 9 in front of it, or an 8. So this has been a nice recovery from 4-year lows. The last 2 years have been really unpleasant because we've been sliding lower. Hopefully we found a footing here at these 4-year lows. The American farmer, I think would be a lot happier if he saw new crop corn north of 5 and new crop beans north of 11. I think those are the 2 levels that we're hoping for. I think if we get them up there, if we get towards there, it'll be a marketing opportunity. And I guess my last word would be, if you're looking for help with your marketing, if you're looking for fresh eyes, how to manage risk, how to, get a marketing plan together where you can reward rallies and defend yourself against big corrections, look me up, Chris Robinson, robinsonagmarketing.com. Give me a call. I've been in the business for over 35 years. The last 15 years worked with farmers and producers. Before that, I was a floor trader, traded my own account at the Chicago Board of Trade for over 23 years. So that's the experience I bring to the table. If you're looking for help, please give me a holler.
Thanks, Chris.
Thank you, sir.
This is Chris Robertson from Robertson Marketing on the Markets Club podcast.
Thank you. You take care, okay? Take care of those doggies.
Yeah.
All right. Bye-bye. Talk to you soon. Yep. Talk to you soon.
Commodities Markets for this afternoon, sponsored by Kyle Bumsted. He's your commodity broker from Allendale Incorporated. Corn futures is up at 5 to 10 cents. Soybean futures is up at 3 to 5 cents. Chicago wheat is up at 4 to 6 cents. Let's take a look for the livestock markets. Cattle is down at 8 to 6 cents. Feeder cattle is down at 9 to 4 cents. Lean hogs is up at 3 to 5 cents. This been your commodity markets for this afternoon. This is your cattle placement in Illinois. Before we got to talk with Kyle Bumsted from Allendale Incorporated, the numbers of the weight of 310 between 320 is 330. The numbers of the weight of 350 between 387 is 324. The numbers of the weight of 412 is 275. This been your cattle placement in Illinois for this afternoon. We were talking about the cattle on the feed report on last week. We were talking about that with Kyle Bumsted from Allendale Incorporated. Kyle, what is your thoughts on the cattle on the feed report on Friday?
Well, very interesting report. It was the annual cattle report that happens once a year. It used to happen twice a year. And it basically gave us decent confirmation that yes, we are lower on numbers out here. However, when you dig into the report a little bit further, some of the numbers weren't as bullish as the trade had anticipated them to be. So I'm going to say it was a neutral report. And since it only comes out once a year, I really don't think much emphasis was placed on it. And I don't think there should be much emphasis placed on it because they're all estimates anyway. And it's an estimate report made up of estimates of whatever people estimate they have and send in those guesses. Normally would.
Do you have any concerns about these prices in the feeder cattle?
Yes, I do. As a matter of fact, it's almost scary what some of these feeders are bringing out there. You're talking 5 weight animals for over $2,000 a head. That's just crazy. And I think that these feeders have kind of sparked a little bit of a scare in the folks, but not quite enough yet. And what I mean by that is they're just saying we don't care. We're just going to buy feeders because there's less cattle. But those deferred live cattle contracts are looking a little bit technically ugly on the charts. So I'm concerned about that moving forward because if those deferred feeder or if those deferred live cattle contracts break, then these feeders get in place. Now there's no way they're going to work as far as what prices they're getting, what they're buying them at. It's just not going to work. So that's something that's a little bit scary. A lot of folks they're still buying, and we do have the border opening up. We did get that confirmation here. The Mexican border is going to be opening up here to feeders at any point in time. We're not going to ship them all through at once, but they're going to be the border is opening up, so we do have that to contend with. I know some order buyers out there in the countryside that said, well, some of the major feed yards were bidding here the last couple of weeks, but now that this border is opening back up, they haven't been in the market out there. So definitely going to be interesting to see what we have for folks out there buying here if this border does get opened up.
Why we see this prices more than previous years since 2015.
Yeah, this is the highest we've been since 2015. And if anybody remembers, well, a lot of people remember 2015, not for good reason, but there was a shortage of cattle back then, and kind of like we're in the shortage right now. But I think that 2015 still sticks in a lot of the old timers' minds, and they're still playing it pretty conservative as far as buying feeders and things like that. So it's definitely something to keep an eye on here moving forward here, the price of feeders and also the cost of gains as well. If this corn market does take off and get above $5, there's going to be some folks that are going to be saying, whoa, look at our cost of gain. But when we look at long term, everyone's always said, well, corn's up, feeders go down, or, corn's down, feeders go up. Well, that's not necessarily been the case here. There's about let's say like a 0.91% correlation that they run in tandem together. They work together. So as corn has gone up here this past fall, feeders have gone up as well too. So that correlation really doesn't hold true.
Those packers are nervous about these prices.
Yeah, I think the Packers are nervous, and what we're probably going to see here, especially this week here, while we're broadcasting, I think Packers are going to be cutting their slaughter pace a little bit here, so they can try to keep that box beef market propped up. And their margins are hurting pretty bad, which that's whatever. I mean, that's their deal. But they're definitely going to be trying to cut kills here in order for them to keep their margin, keep that box beef propped up and try to keep their margin intact is what's going to happen here. So it's not going to be surprising here to see box beef go up and cattle go lower because that Packers got control of the chain speed, and they're going to try to get cattle bought as low as they possibly can here this week from the sounds of it. And I look for steady cash here in the north, and I'm looking for rough, maybe steady, maybe a freckle higher in the south. But we haven't heard any cash trade early to start the week yet. So it's going to be anybody's guess right now. I'm hoping we get something going here by tomorrow on Wednesday or Thursday, but wouldn't surprise me if it waits till Friday. And it's also the first week of the month too, so they also have contract cattle to pick from, and they doesn't necessarily going to mean they're going to be very active in the cash market if they've got contract cattle to pick from. So we do have that to kind of think about as well.
True, Kyle. Do you have any final thoughts on the tariffs for cattle?
Not right now. I guess it's just headline to headline. Whatever headline comes out of the White House, that's the one that's going to get traded immediately, and then they just kind of let the smoke clear and wait for the next headline right now.
What happened if tariffs put the cattle?
Well, the Mexican tariffs, those have been delayed a month, and I'm not sure they're going to affect things. We all know those cattle are going to come across here at some point here into the States, but I think there's definitely we do definitely have to take a look at that 25% tariff. I don't know. I didn't technically see cattle listed anywhere, but I think most of the concern is on the corn going to Mexico. Now, Canada, they said the fat cattle coming into Canada, but Canada sends in, I think, 14,000 head maybe a day. And so I don't know if that's really going to affect things that much.
Thanks, Kyle.
You bet. Thanks for having me back.
This is Kyle Bumsted from Allendale Inc. on the Markets Club podcast. Thanks to Chris Robertson from Robertson Markets and Kyle Bumsted from Allendale Incorporated. This has been the Markets Club podcast. We were talking about the commodities markets for each Tuesdays and Thursdays on each month. I am Cesar Delgado. You have a great day.